Good morning, everybody. It's Monday, September 30th, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 1.25 at 416 3/4. November soybeans down 10.5 at 1055 1/4. December Chicago wheat up 2 at 582. December Kansas City wheat up 1.5 at 578 1/4. December spring wheat up 2 at 610 1/4. Let's start off with Friday's rally.
Soybean futures rallied sharply on Friday. The nearby November 24 contract gained nearly 25 cents per bushel and posted its best close since July 25th. The rally was led by soybean meal futures, which gained a whopping 5.3% on the day. Strong hurricane-related storms will result in disruption of soybean crushing at some facilities in the southeastern U.S., causing the market to recalibrate its expectation of meal supplies over the near term. Concern regarding Brazilian weather was also a contributing factor.
The meal, for whatever reason, was absolutely the deal on Friday. Was it because of plant shutdowns that were related to the hurricane? Maybe. When you look at this hurricane and its effect on agriculture, first off, 80 people died. So this is a tragedy. It goes well beyond agriculture. But when it comes to agriculture, you've got a lot of poultry operations in the Southeast. You've got cotton crops that were affected. You've also got soybean crush facilities that are probably going to be shut down for a little bit. And maybe that's why the meal market rallied, at least to some extent. You can go back to that meal chart and say, okay, maybe this is a technical breakout. Maybe there was some technical buying. But I think the fundamental reason here was that you have a bunch of crush plants that are going to be shut down for a little bit. The rainfall here is just absolutely phenomenal. I mean, I went back 7 days because 72 hours was my other option, and it didn't go back far enough. Some of these areas had 13, 14 inches of rain over the course of 4 or 5 days, which is absolutely just tragic. It's a biblical type event in these areas of North Carolina and Eastern Tennessee, places like that, Georgia, South Carolina. So pretty tragic stuff. Talking about South America, I didn't do South American weather maps here today. There's a little bit of rain over Mato Grosso this morning. There's going to be some rain over the next 7 days. Still well below normal in terms of rainfall in those areas. And the second week of October looks a little bit more promising. But yeah, really nice rally on Friday.
USDA will release its quarterly grain stocks report today at 11 a.m. Central Time. September 1st, stocks of corn, soybeans, and wheat are likely to be drastically higher versus the same period last year. Traders estimate that U.S. corn stocks as of September 1st were 36% higher than a year ago. Soybean stocks are estimated to have increased 32% versus the same period last year, while wheat stocks likely rose 12%. There is some slight variation between the pre-report estimates and USDA's most recent estimate of the old crop corn and soybean carryouts. In addition, some traders expect USDA to make small adjustments to their 2023 corn and soybean production estimates.
So these are your old crop carryout numbers for corn and soybeans that they're going to print today. This report's hugely unpredictable. The grain stocks, it's an important report. It's my least favorite because it's impossible to predict. There's not a whole lot of ways you can go about refiguring what USDA has already done. Where they could come in and surprise you would be again to these 2023 crop estimates. We've seen them do it before. Well, you'll see retroactive adjustments to last year's crop in this September report, and that's kind of a kick in the teeth. If you say it's a friendly number and they cut the production numbers for last year, you were somebody who was forced into selling old crop bushels, at the lows back at the end of August. That would be very frustrating to you, and I understand that. So be prepared for maybe something regarding last year's crops. Who knows? But this report can absolutely be a market mover. It'll be out at 11 a.m. Central Time.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of last week's premium videos?
Chris Barron was on Thursday. This was a topic that we had requested over and over and over. 2014 through 2019, what worked with regard to corn and soybean marketing? Chris Barron joined me, and we hit this with a couple of angles. So a lot of people believe that we're drifting back into a period that could resemble 2014 through 2019, meaning that we're kind of walking a tightrope of profitability on the farm. Sometimes prices will be profitable, but a lot of times you're below production cost when it comes to corn and soybean prices. We hit this from a couple different angles. Chris had some really great stuff with regard to ROI, talked about government payments. I had some detailed charts along with some other stuff that I thought was hugely important. I talked about the two indicators in my head, at least, that worked best in hindsight during that time frame. Also, last week, Jim was on Friday. We talked about the melt up in asset prices. If you guys are interested in investing outside markets policy, Jim's stuff every other Friday is absolutely fantastic. He's been really spot on with a lot of his calls. If you guys want to see the premium stuff, go to standardgrain.com this morning. You can sign up. It's a piece of cake. I know a lot of you guys are busy. You're in the combine, you're in the truck or whatever. You can sign up on your phone. It takes like 30 seconds. We do Apple Pay, Google Pay, all that stuff. And everything that we send out can be viewed or read on your phone. The email is set up to be read on a mobile device. All the videos can be watched on a mobile device with one click. There's no login instructions. It's all really, really easy to do. Give that deal a shot this morning, guys. I'll forward you a copy of this morning's email, which includes the 6 most recent premium videos. Also, report day is a very good day to be a subscriber. I'll have a post-report snapshot video out within 20 minutes of the release or so.
The funds continue to trim their net short position in the corn and soybean markets. CFTC released weekly commitment of traders data on Friday. As of Tuesday, September 24th, the funds were net buyers of 4,000 contracts of corn. Funds were also net buyers of 37,000 contracts of soybeans. The net short of 76,000 contracts of soybeans is the smallest since the beginning of June. Funds were net sellers of 3,000 contracts of SRW wheat on the week. Since the peak fund short back in July, fund traders have covered 362,000 contracts worth of net shorts across the corn, soybean, and SRW wheat markets.
This has become a hugely substantial short covering event, and maybe the price action associated with the short covering event is a little bit less than we had desired. We'd like to see some better prices associated with this, of course, but I can't help but wonder what the reason is. Is there a fundamental reason behind it? Is it we're going into, we got a few months left in the year? Is it something like that? Just profit taking? Is it Brazil? Is it something with China and the stimulus? A lot of different reasons, but I can't point to one that's like super specific. It just seems like there's a lot of little things, I guess.
Europe's wheat crop is slated to decline to a 12-year low. According to the European Commission, this season's soft wheat crop is estimated at 114.6 million metric tons, down 9% from last year's crop. Leading the decline is France, which is projected to have its smallest crop in 40 years. Germany's crop is also expected to see a significant decline. The two countries combined are the EU's largest wheat producers. The decline in production is due to unfavorable growing conditions brought on by hot and dry weather. The Commission also reported that the EU is estimated to import an additional 1 million metric tons of soft wheat this season.
USDA acknowledged some of this last month. They dropped the production estimate. The European Union is a big deal when it comes to wheat. They are, in total, second largest wheat producer on the planet behind China. They projected to account for 15.6% of all global wheat production. Exports, also a big deal. Distant second behind Russia, but still the second largest wheat exporter. At least that's the projection, 14.5%. So you've got problems in a lot of areas that are producing and exporting wheat. European Union has problems. Russia has some problems. Ukraine has some problems. It's early in the season in a lot of those places, but something to be monitored. The wheat market has not acted very well. It's been kind of stagnant here for a couple weeks. Hope we can see some upside there.
The Vancouver grain workers strike came to an end last week with a tentative agreement. The 4-day strike at the Port of Vancouver ended late on Friday when the deal was reached. The agreement will now be recommended to port employees, and a ratification vote will take place on Friday. The strike affected 6 terminals at the port that are vital for grain exports. The strike was projected to hinder the arrival of almost 100,000 metric tons of grain at the terminals daily. Dock workers at the Port of Montreal, one of Canada's busiest ports, are set to strike for 3 days, starting today.
So one of the strikes is over, but there's another one that's starting.
Yep, another one.
But the big one's over?
Yep, the big one is over.
Okay. All right. Well, that's good. We were worried about, especially in Canada, basis impact. And then you could have seen some grain and some stuff show up in the U.S. that maybe wouldn't have otherwise, but it looks like we're kind of through that.
Money managers have increased their bullish position in gold. As of last Tuesday, the funds and other large speculators increased their net long position by 0.9%. The net long of 254,841 contracts is the largest since March 2020. Gold reached an all-time high last week of $2,685.58 per ounce. The price of gold has been on an upward trajectory due to expectations of more rate cuts from the Federal Reserve.
So money managers like gold. What is the reason? I don't know. Is it an inflation hedge? Is it a Fed thing? Is it a currency debasement play? Maybe a little bit of everything, but this is an all-time high, and gold has performed very, very well this year. It's up 28% year to date, so outperforming a lot of things. Interesting rule of thumb. The long-held rule in the marketplace is that an ounce of gold historically has been able to buy a decent suit. But then again, it may depend on where you shop. I dress like a homeless person 98% of the time. But if I were to go buy a decent suit, maybe I would gauge it off of the price of gold and say, you know what, if I want a decent suit, I got to spend $2,600, which seems like a lot. But if you want something that's nice, tailored, it's going to last for a while, that's probably a good gauge. So has been a good inflation hedge over the years.
USDA reported a flash sale of soybean oil on Friday. U.S. exporters sold 20,000 metric tons of soybean oil to South Korea for delivery during the current marketing year. This is the first flash sale of soybean oil since April 2023.
Yeah, we're not supposed to be. At least if you were to go back and listen to stuff that was written a couple of years ago, we're not supposed to be exporting any soybean oil. But here we are. And now meal is the leader in the market, and we're supposed to have a glut of that. This whole crush expansion thing hasn't played out exactly how we thought that it would. What did cattle do on Friday?
Cattle futures were narrowly mixed on Friday. Live cattle were down 35 cents to 17 cents higher. For the week, they were an average of $1.48 higher. Feeders were down 172 to 85 cents. Feeders were down $1.72 to 85 cents higher. Week over week, feeders were an average of $2.08 higher. Cash cattle trade was higher last week. In the Southern Plains, cattle were $2 higher at $185. Cattle were also $2 higher up here in Nebraska, selling at $186 to $187. And then over in the Western Corn Belt, cattle were steady to $3 higher at $185 to $187. Box beef was lower on the week. Choice ended Friday at $296.69. That was down $3.50 for the week. Select closed Friday at $282.08. That was down $6.51 for the week.
Outside market's fairly quiet this morning. U.S. dollars about flat. Stocks are just marginally lower. Bonds are off a little bit. Crude oil is up 3 cents in the November WTI at 68.21. Remember, guys, report today at 11. Have a great day. We'll talk to you on Tuesday.